In every corner of the world, money is losing its value. From Zimbabwe to Venezuela, from Europe to the United States, the same story is unfolding. Money is collapsing. But how did we get here? How did something so essential, so ubiquitous, become so fragile? At first glance, it seems like the end of the world is coming. Countries are printing money faster than ever before. Inflation is running rampant, and entire economies are teetering on the brink of collapse. But there's a deeper story behind this, one that stretches back centuries, and one that involves more than just the economic theories you've heard about. This is Legacy of Wealth, where we dive deep into the forces that shape our financial systems. Today we're uncovering the shocking truth behind why money is collapsing and what it means for you, me, and the world. Why does a currency lose value? Why does it go from a symbol of wealth and security to a piece of paper or something that costs more to produce than it's actually worth? The answer isn't as simple as printing more money or economic mismanagement. Something far more insidious. Something that involves power, greed, and a system that's designed to fail. This is the paradox. Money's collapse isn't a mistake. It's the result of a system built on collapse. If you're wondering who benefits from this, you might be surprised by the answer. The history of money's collapse, from gold to fiat, to understand why money collapses, we need to go back to the very beginning. Not to the digital age, but to the creation of money itself. In the ancient world, money was tied to something tangible: gold, silver, and other precious metals. It had intrinsic value. If you held a coin, you were holding a piece of something real. But over time, this system became unsustainable. Gold and silver were finite, and empires needed more money to fund wars, infrastructure, and expansion. The birth of fiat money, money that has no intrinsic value, but is accepted as currency because a government declares it so, changed everything. In 1971, the United States officially left the gold standard, and the modern era of fiat currency began. With this move, money was no longer tied to any physical commodity. Instead, it was a promise. A promise that the government would back its currency with power, resources, and trust. But what happens when that trust is broken? The domino effect. How one collapse leads to another for decades. The global financial system has been built on this very foundation of trust. The US dollar, the world's reserve currency, has been the backbone of international trade. But beneath the surface, the system was always teetering on the edge. Every crisis, be it the 2008 global financial collapse, the European debt crisis, or the recent economic turmoil, has one thing in common. They all symptoms of the same disease. The collapse of money isn't just an isolated event. It's a chain reaction. The US, for example, owes trillions in national debt. But much of that debt is held by other countries. And in turn, those countries owe money to even larger creditors: banks, hedge funds, and multinational financial institutions. When one country falters, the ripple effect is felt across the globe. Take a look at Japan, with a national debt over 250% of its GDP. Japan's bond yields remain near zero. Its economy has been mired in stagnation for decades. So how does a country with so much debt still function? The answer lies in refinancing. Debt is rolled over, new loans replace old ones, and the cycle continues. The system survives on belief, not on actual repayment. The illusion of control. How central banks manipulate the system. At the heart of this financial chaos is the central bank. The Federal Reserve, the European Central Bank, and others control the flow of money, but not in the way you might think. Central banks don't just set interest rates or manage inflation, they manufacture debt. When the Fed buys government bonds, it creates new money. It's a simple exchange: bonds for cash. But here's the catch. This money is backed by nothing except a promise. Promise that the US government will pay back its debt. Eventually, this process has been going on for decades. But what happens when confidence in this system starts to fade? When people no longer believe that the government will pay back its debt, everything comes crashing down. The global web of debt. Who owes whom? We've been told that the US is in debt to China. But here's the reality. Most of America's debt is domestic. The biggest holders of US debt aren't foreign governments, but American institutions, banks, pension funds, insurance companies, and even the Federal Reserve itself. The real question isn't who owes money, but who owns the debt. The truth is, debt is not just between countries. It's a complex web of interlocking promises where everyone is both a debtor and a creditor. The United States owes China, but it also owes itself. Japan lends to the U.S., but the U.S. also lends to Europe. And the World Bank, the IMF, and other international institutions are part of this global game of credit and debt. The collapse of trust. The tipping point of the financial system. What happens when trust breaks down? We saw it in Greece in 2010, when the government's debt became unpayable. The European Central Bank and the IMF stepped in, but their rescue came with painful consequences: tax hikes, spending cuts, and mass unemployment. This wasn't just a financial collapse. It was a societal collapse. The people who were paying for the crisis were not the ones who caused it. The debt was a burden, but the benefits went to the investors, the hedge funds, and the banks. And when the next crisis hits, it won't be different. Governments will borrow more, issue more bonds, and roll over debt. But the only way this system survives is through confidence. And once that confidence fades, the entire house of cards will come crashing down. The final truth. Money is collapsing, but it's not what you think so. What's the truth behind money collapsing? It's not just a story about bad decisions or economic mismanagement. It's a story about a system designed to fail. Money, as we know it, is an illusion. It's a promise that can't be kept forever. Governments and central banks have built a system where debt is the product, and the goal is not to repay it, but to keep the belief in it alive. The only thing holding this system together is confidence. If that confidence breaks, everything collapses. And when it does, it won't just be the collapse of money, it will be the collapse of trust itself. So, what does all of this mean for you? This means that the money in your pocket, the savings in your bank, and the investments you've made aren't as safe as you think. The system is built on a lie, and eventually, the truth will come to light. But for now, the machine keeps turning. And as long as we believe in it, the illusion remains intact. But what happens when that belief falters? Will you be ready? If you found this perspective eye-opening, don't forget to subscribe to Legacy of Wealth. We'll continue uncovering the hidden truths of wealth, power, and money. History has the answers. Just need to know where to look.